Welcome to the first lesson of Financial Accounting Fundamentals presented by Wisma Global Education together with Learn TV. Today we are going to discuss about the very basics of financial accounting, which you would like to know what this financial accounting is all about. So now you can see on the screen what is accounting. In the first place, accounting is collecting the information related to the finances in a business, recording them and summarizing them in a way that you can use it effectively to present and communicate to the parties who are interested about your financial transactions. Now let's see in detail how you are going to do each of these activities. When it comes to collecting the information about the finances of your business, you will have to look for some of the documents that this financial information is mentioned in print or some other accurate method. So most of these are available in the sales and purchase orders that you are placing as a business, and then you will have the invoices which are quoting the details about the goods or services that you received from your suppliers. Same way, there will be the credit notes, receipts, etc., which are quite useful when it comes to creating the financial accounting. Then we will move on to the next step of the process. It is recording of the financial information. When it comes to recording the financial information, you directly do not go into making a set of accounts, but rather there is a set of recording documents by the names of the day books, cash book, petty cash books, and the journal. So let's look at what are these day books. These are the sales day book, the purchases day book, the sales returns day book, the purchases returns day book. All of these documents will be used to compile the final accounts. But before that, you will mention all the details that you find from the source documents into the sales, purchases, sales returns, and purchase returns day books. Then we come into the cash book, which is also looking like an account, but this is very special because all of your cash transactions, the cash that is coming into the business and the cash that you are paying out of the business, is recorded in the cash book. There will also be minor transactions that you do on a regular basis, such as buying the newspapers for the office or some other small utilities. So for such purposes, there will be another separate account by the name of petty cash book. So apart from all these above documents, including the day books, the cash book, and the petty cash book, there will be another one by the name of journal, which we will cover in detail, but for the time being, I would mention this as a separate entry that you make when you do not have a standard set of guidelines related to that particular financial transactions. And let's move on to the next step. Summarizing. So this is where the real accounting happens. Probably you will be quite excited about this part. We do all this accounting in a place called the nominal ledger. So in the nominal ledger, you will find the accounts. There will be several different formats used by different organizations in order to record their financial transactions. But we will start with the double entry accounting system, which is the most common and most understandable in the beginning. And finally, we have to communicate about our financial transactions. So it is done through the financial statements that you prepare periodically. The main financial statements, as you can see on the screen right now, is going to be the statement of financial position and the statement of income statement. Now you will have to present the financial transactions that you have done in a way that parties can understand. So how will you do it? It is done through the financial statements, which are known as the statement of financial position and the income statement. So these financial statements are going to show you about the position of the business right now. So position means how much you own, that means how much belongs to the business, as well as how much you have to pay in the future, that means the liabilities of the business. We will get into greater detail of this as we go on. And then there's another statement, which is the income statement, which shows all the business that has been made over a particular time period, typically 1 year, the incomes as well as the expenses of the business, and ultimately deriving the profit that you have generated in that time period. Fine. So, why do we need to keep these accounts? Mainly, you want to keep a track of what is happening to the money in the business. So, where the money has gone, from where the money has come into the business, all these details are required. So, let us see why do we need this kind of information also. So, if you can look at the screen right now, it is helping the business to run in an efficient manner. That means out of the littlest money possible, you make the biggest ever profit possible. And it indicates how managers are successfully managing the finances of the business. Now, you must be wondering, why are we keeping these accounts? So, these accounts are kept in order to find out where the money is coming from into the business and where the money is going out of the business, and what are you going to do with that money. Why do you want to find out this information? It's because you want to find out whether the business is running efficiently, and you can plan the business in a way that you can make it an efficient operation, and you want to see whether the managers of the business are using the finances of the business effectively and carrying out the business in a profitable manner. Thirdly, it provides information about the resources and the activities of a business. So, generally, as we will learn in economics, a business is a place where you will combine several resources and generate a valuable economic resource which you are going to sell. Very good. Now, as I told you, there are owners of the business who is wondering what the managers of the business are doing with the money that they have given into the business. Not only the owners, there will be several parties who are interested about what is happening in this business. So, you can see right now different user groups related to the business and the reasons why that they are interested about the monies in the business. In the first place, the managers of the company. The managers would like to know how much money they have in the business, how much they have spent over the past time period, and how much they should spend in the future, as well as how much of income that they want to get into the business. Then there are the shareholders of the business. So, these shareholders are the owners of the business most of the time. They want to find out whether the business is profitable in the first place, and they want to find out how much of return that they can get out of the money that they have invested into the business. Apart from this, there will be another set of people, the suppliers, bankers, etc., who are actually giving you either money or other resources to run your business. In the first place, the suppliers, they will be concerned whether you will be able to pay them on time for the goods that you have received from them. And then you have the providers of finance, usually the banks, and in addition to banks, there are financial institutions also who want to see whether you have ability to pay the loans that you are taking from them and the interest that comes along with the loans. Then you have the tax authorities, which is part of the government, who want to identify the profit that you have made in that particular time period, and out of that receive the tax income for the government. And it continues. There are so many other parties also, such as the employees. Employees, they want to find out whether the business is running well so that they will receive their salaries on time, whether they will continue to be employed at that place. Then there are the financial analysts, those who are analyzing about the businesses and providing recommendations to the investors. So, they would also like to know what's happening in a business. Government, in addition to taxation, there are so many concerns of the government, whether your business is compliant with the law and regulations of the country, whether your business is providing safe means of employment for the people of this country. Well, of course, the employees also will be interested about what's happening in the business, mainly because they want to find out whether their jobs are secure. In addition to the job security, some of the employees will be very passionate about what they are doing, so that they will be very interested about what's happening in the business. In addition to them, there will be the financial analyst. Those are the ones who would analyze about the markets and the businesses and provide recommendations to the investors to take investment decisions. Then you have the governments who want to find out whether your business is complying with the law and regulation of that country, and if your business is providing a positive contribution to the economy of the country also. And finally, the general public will be interested about your business as well, because they want to find out what's happening because of the businesses to the surroundings that they are living. So as you can see, there are so many parties who are interested about what's happening in the business, and the role of an accountant is to find out what's happening to the finances of the business and present it to all these parties in an appropriate manner. We will be concerned about two major statements, which I mentioned earlier also. As you can see, the statement of financial position. So it is showing the assets owned by the business. That means you have a right of possession of those items. Then the liabilities that you owe by the business. That means these are the things that you have to pay to the other parties immediately or in the future. So always remember, the statement of financial position is like a snapshot that you take with a camera at a particular point. Therefore, it is at a particular date. And then you have the income statement. So the income statement, as the word sounds income, will have the income items of the business as well as the expenses of the business, which ultimately shows the profitability of the business. So as we all know, the businesses would make profit by doing business. So the business is not done at a snapshot, just like we did in the statement of financial position, but here the business will go on through a particular time period. So when the business is going through a particular time period, you record the statement of income over a particular time period, usually which is going to be 1 year. That being said, we'll get to know a little bit more about businesses. So when you're talking about business, actually the whole thing starts with organizing the resources together. So in that case, it's not only the businesses who use the financial accounting, it's also the organizations as a whole. So if you look at the organizations, these are the organized entities which are converting certain inputs into outputs. A regular business would take the raw materials, labor, and capital and create the goods and services. Okay, let's get to know a little bit more about business. Virtually all the businesses belong to the category of organizations. Organizations are where the inputs are converted into outputs through an organized process. So these organizations vary based on the objectives that they have. The businesses are the organizations who have objective of maximizing the profit so that it gives better returns to the investors who have put money into that business. There are other organizations who are looking for other objectives other than maximizing profit. Some of them are NGOs, some of them are social service organizations, some of them are governments. And they will have different sizes, different nature of operations, and will be owned by either people, the government, or even other companies. So these organizations, as you can see on the screen right now, mainly the businesses, then you have the government departments, authorities, corporations, then you have charities such as the religious groups, and then you have non-governmental organizations and not-for-profit organizations. Virtually all these organizations would require financial accounting because they want to be accountable about the monies that you are using in the activities. Then you have to consider the separate entity concept. It says that when you make the accounts, it should be separated from the owners. So it can be very easily understood in this way. If you make a set of accounts for a business, you can think that there's a separate account, maybe a bank account or any other place where you record the transactions separately for the owner, and there will be a separate set of accounts for the business. We will be using this concept continuously as we go through our accounting studies. And then let's look at the financial aspects of a business. I think you can remember we were talking about statement of financial position and the income statement. So both of these statements had two categories each of financial aspects. The statement of financial position has the assets and the liabilities of the business, and the income statement had the incomes and expenses of the business. So let's go and study about the assets and liabilities in the first place. So you can see an asset is something valuable that a business owns. Just because it has a value, you can use it in a way that you can generate further revenue or economic benefits out of it. Therefore, you would call it as it represents the right of a business to future economic benefits. So in layman's terms, what are these things? If you have vehicles, you can use to deliver goods, services, as well as people and make money out of it. If you have machines, you can produce goods, and maybe you can use in production of services also and earn money out of it. So these are the assets that a business owns. These assets you can split into two major categories. One side is non-current assets, the other side is the current assets. The non-current assets represent all the assets which you keep in the longer term, using continuously to generate further revenue. Perfect examples are the buildings and the machines that you have. You don't buy buildings on a continuous basis and sell it on a continuous basis unless you are a real estate company. Every regular business would own buildings in the longer term, use this building to generate further revenue. And then you have the current assets. The current assets are the ones which you hold in the short run, which you would sell in turn to get money. So these current assets, as you can see, if you are a business selling, let's say for example, vegetables, the vegetables that you buy in the morning from the wholesale supplier, which you sell in the evening to another end user, it's a current assets that you have. So there are varying types of current assets, but the characteristic of all these current assets will be that you hold it only in a short run to convert it into further revenue, and out of which you generate a profit. Then all these assets actually can be split into further two categories: tangibles and intangibles. If you look at the tangibles, you can touch and hold them, but the intangible assets you cannot touch and hold. So as an example, one tangible asset can be a TV that you have, a computer that you have, even the buildings, machinery, all these touchable assets that you have will be tangible. But there are untouchable assets. For example, a patent that you might own, a license that you own. These are the things that you get out of know-how. So all the current assets and non-current assets also can be further subdivided into tangible and non-tangible assets. Now let's look at the liabilities. In the first place, what is a liability? It is something that business owes to a third party, and they represent the business's obligation to transfer economic benefits to the third party. That means you have to make either a financial payment or some sort of a service or transfer some goods. One way or the other, you still owe another organization or an individual as a liability. Since you have to pay back, you call them as the payables. So you can see on the screen now, it is called as the payables. Even the liabilities, you can split into two major categories called current liabilities and non-current liabilities. So the current liabilities are the payables of the business that must be paid within fairly a short period of time. To many, it's a subjective statement, but generally we accept the current liabilities will be paid within a period of 1 year falling from now. Then you look at the non-current liabilities. These are what you have to pay in the longer term over a large number of periods. For example, the long-term loans. Right? So the liabilities further divided into current and non-current, we still do not divide it into tangible and non-tangible. And together with that, we come to the end of today's lesson. If you have any questions and doubts that you want to clarify, you can contact us always in the address that is seen on the screen right now, WISMA Global Education, 2B, Sri Soratha Mawatha, Gangodawila Nugegoda, and over the phone 0777 920 820, as well as by email info@wismaglobal.com. Thank you.